Hello traders, welcome back to our channel. In this video we are going to show an example of market structure that is not a perfect one, and how can we adapt in order to profit in this situation. As we already know, we prefer to trade the market structure with supply and demand zones. This chart is Euro, US dollar. We start always by defining the trend. And this chart shows clearly that we are in a downtrend. Next step is defining the structure. The downtrend consists in lower highs and lower lows. With a horizontal line we defined each of them. This technique will help you to spot them correctly if you are a newbie. If you prefer to trade with the trend, the lower high are perfect levels to sell the market. In a nutshell, you must wait for last lower low to be broken and wait for pullback. Very important, do not enter at breakout because risk-reward will be lower and less profitable. But isn't the main topic of this video because the setup that we shared was a reversal one. We noticed a break of structure, a break of last lower high. As we had mentioned on previous videos, it's based on the Dow theory of trend change. Make sure to like and subscribe. This encourages us to make more helpful videos. Now we are going to illustrate the textbook pattern of trend change. When we look at the chart, the last lower low, it's almost at the same level of previous lower low, which isn't not perfect as we want it to see, but we can qualify it as our last lower low. Our duty is to find the pullback ending point that will serve as potential entry level. In this case the choice was clear. We noticed a rally, base, rally demand zone. The characteristic of this demand was on point. Price left the base with a strong bullish candle. The base is formed by a single candle. This element makes it a strong zone that worthwhile considering a buy trade there. And this was exactly what we did. We waited for price to touch this level. As we can see, price continued to pull back but didn't touch our demand zone. It's totally fine, we can't control the market, we try to adapt to it. The pros of waiting for a deep pullback: it's a good risk-reward trade, and cons is that price might not touch the level and we can miss a potential trade. We must accept that because trading is finding high probability. In this case, don't blame the market and don't blame yourself. According to psychologists, a missing trade is more painful than a lost trade. Price developed and we re-evaluated again this pair for potential bullish opportunity. We have a new higher high established, and price is pulling back to create new higher low. In this situation, our goal is to search for fresh demand zones. We found two of them, the first near the previous higher high, and the second is at the previous higher low. Both zones have high probability of success. After defining the potential entry levels, we are going to define the potential take profit zones. We have two clear supply zones that are clear and well defined. In a nutshell, we have three entry levels, considering the first one that price didn't touch. We prefer to use supply and demand in our trading because give us a clear entry and stop loss levels based on the defined zone. Price pullback and touched the first zone and bounced in upside direction. This push wasn't significant enough to break the higher high and reach the full target. Price made another attempt to break it but failed again. Then we have a strong sell-off, and price dropped below the first demand zone, made a retest and reached the second demand. This zone resulted to be stronger than previous one. Price consolidated for a while and bounced strongly in upside direction, reaching in this way the full target at supply zone. If your trading style is more aggressive, you can use these take profit levels as an entry in opposite direction. Price dropped sharply with even more strength than the bounce before. Entered the last demand zone and tested it all. This is why we suggest to put stop loss below the zone if we are trading demands, and above the zone if we are trading the supply. This was a pending order that didn't trigger in the beginning of this setup, but the zone didn't lose its potential. During the strong sell-off, price created new fresh supply zones that will logically serve as a realistic target. On these levels had a potential sell opportunity. The first supply zone is a hidden one, you can spot it if you shift on lower time frame. The second one was a clear drop, base, drop supply. Market is offering us two potential entry opportunities. We expected a fake-out pattern before price touches the first level. The fake-out patterns are very common, sometimes even more common than regular patterns. Price consolidated for a while and then made a small fake-out, but not enough to reach the first demand zone. We missed the entry, price dropped sharply in downside direction. In a nutshell, when we look the full picture, we see the power of supply and demand. It's very evident. We are going to miss some entries, or some of them are going to hit the stop loss. We can't avoid that, but in long term this system offers a high probability setup. Thanks for watching. See you on the next video.